It is time once again for the weekly closes on our favorite Bitcoin miners. And I tell you what, it is a very important time to be looking at these very closely and scrutinizing them every single day, especially those weekly closes right now, which we're about to get into. But before we get going, check out the channel memberships. It's a great way to support the channel, and you get your real value, your bang for your buck in the stalagmite level, where you get the real-time trade posts and members only videos. I'm going to bring up here a screenshot from my brokerage here. And since starting the paid memberships back in July with the trades that I've taken and posted there, I've made over $13,000. You can see there's a bit of a disallowed loss there of $989. I think I did a wash on like maybe some CleanSpark warrants or something like that. Can't really remember at this time, but if you take that out of that $14,542, we're looking at about $13,600 that I've made in this account since July 1 going to today, which is September 20th. So not a very long span of time, and quite a decent return there with a 64% gain loss ratio there. So come on and check out the channel memberships. Perhaps get interested in that stalagmite level there. We're going to start with CleanSpark here. So this is good. This is really good. So this week we got an engulfing candle, and we engulfed the previous all this down move. This whole down move was engulfed in 1 week, really in like 2 days. So that's like what, how many weeks worth? Because we were already up above. So 1, 2, 3, 4, about a month's worth of down we engulfed in 1 week. I told you, if you watch the daily videos, I told you this thing was consolidating down here between $10 and $8.91. I said, and once it's done going sideways, it's going to explode out and explode out fast. Do I think it's done? No, I don't think it's done. Okay, so we came back. From above, we hit this blue line, then we came back, revisited this yellow line, and then we blasted through that blue line like it wasn't even there. We also blasted through that $13.30 level and held. We held. Now, we did hit this orange line. Now, this is concerning a little bit, all right? Let me get rid of this one. This line doesn't matter anymore. We broke it. This line right here, yeah, remove it. This line down here doesn't matter anymore. We are done with it. This line that I just touched down here, 1039, I'll hold that for now because that's an area it may return to if things fall. I am going to leave this blue line on here because if it starts to roll over into October, I am kind of expecting it to potentially hit this line here around 1180 or so and then continue on. So I will leave that there. And that does feed into this rising wedge pattern that I've got here on CleanSpark between the orange line and the blue line. Now, I will also keep that yellow line down here just in case, like if we get a real sell-off moment, it might come back to touch that. Okay, that is serious support there, along with this white dotted line. That's also some serious support that goes all the way back down to 2023. So that would be like a bear market kind of bounce zone if I ever did see one. So what happened here? This is the bull market rejection zone up here. I'm looking, it tapped this orange line like to the penny. Like, look at this thing. It went from, I'm a little bit off over here, so maybe I need to go like just a little bit up. So yeah, and if I do that, things get a little different, huh? So about right there. Does it still touch there? Not really. So let me go ahead and readjust that a little bit. It's hard to see these things sometimes. Okay, so we got, oops. All right, so we got really close to it. Not quite. So it could push up a little higher next week to maybe 1420. And if it gets above this though, if it gets above this, we're looking at a double bottom kind of scenario, right? So look at what we're looking at here. All right, so we got a bottom and a bottom. That was a double bottom there. But we also have the larger double bottom where we come here, and then we went up, and then we came back down, and now we're coming through here. And this is kind of the neckline. This orange line is the neckline. When we conquer that, this bigger double bottom breaks, and that could push us up to 18 or higher on CleanSpark. So I'm paying very close attention to that, and that would coincide up here with coming into the zone here on the volume profile between 1630 and about $18, where we got that thick volume on the profile there. So watching that very closely. To the downside, we really want to stay above 1280. Under 1280, we're going to have some bad times, right? Like right there. Why 1280? Well, if we look to the left, look at these volume bars, right? The largest volume bar back here is on this doji candle, which the bottom of the body on that is about 1280, meaning that is where the bears will re-engage likely and push us down to this, at least this blue line, maybe lower, which could potentially be, you know, somewhere around 12 bucks or so on the volume profile there. So we're paying attention to that. If we conquer this orange line, we're pushing up, and we're going to push up hard. Now, the stochastics, the BX trender, the stochastics, and the RSI favor an up move, a breakage of this double bottom. So we're looking for that. I am feeling more bullish than bearish on this, and I have been. If you've been in Stalagmite, you've seen that I've been loading up on call options for Clean Spark leading into this move, and I did in fact take some profit on those to lock in most of my cost basis. So I'm almost 100% purely in profit at this time on those calls. I'm almost there. I need to sell like one more contract, but I didn't buy an even amount of contracts, so I couldn't split it evenly. I should have bought more contracts. Oh well, what can you do? All right, let's take a look at the warrants real quick. What are we expecting from the warrants? Let me turn off the draw. No, I'll leave the drawings on. So the warrants here, they're getting kind of chopped up here at about 50 cents. They're having a hard time breaking above 50 cents. When it breaks above 50 cents, you better watch out for 81. Better watch out for 81. Now, I am looking at 56 pretty carefully because it has come up to 56 about twice now and rejected there. That is going to be rough. When we break 56, I'm looking for a move to 72 and then quickly a move to 82 afterwards. Okay, if we get over 82, this thing's going to push up hard to about $1, where that is a psychological level where it is going to struggle, and then a push to potentially $1.20, actually $1.12, where there's a lot of volume, and then 123. Once we get above 123, we are going to hit the top of that at 164, where we will likely struggle a little bit, and then if everything is great and everything is grand, and Clean Spark can get back into the 20s. Again, we could see this thing blow past a couple of these levels up to like 225, 263, maybe even $4. That would be crazy, but it is not out of the realm of possibility in a euphoric market. And you better believe we are now entering a euphoric market. So we are coming towards the end now. Okay, we're getting there. The first kickoff of the end has begun, and there will likely be a lockout rally coming through here to the end of the year, and we'll talk a little bit about that near the end of the video when I bring up Bitcoin, and I will bring up the Bitcoin chart at the very end. So let's take a look at Mara now. Mara, same thing. I said it was consolidating here between 1670 and 1448, and I just loaded up on contracts on Mara down here on this volume spike. Like this volume spike, I said as soon as we get above and hold above that volume spike, this thing is going to pop up to the next volume spikes. And guess what? It did. It popped up to the next volume spike. I really want to see it hit 1980 and conquer 1980. We conquer 1980. And we will see this thing pop up into the 20s and possibly 30s like real quick. So we did look at this and we saw that maybe this could have been a head and shoulders, and I did warn that if we get below that neckline at 1450-ish, that we could see this thing dump, but that's not what I was expecting. That wasn't my base case. My base case was that this was consolidation and that we would break out, which is why if you've been in Stalagmite, you've seen that I've just been buying calls constantly, and I've talked about it here as well, that I've been buying up Mara. And if you were in Stalagmite, you knew exactly when I was doing that, and now we're up what, like 100 something % on each of those contracts now. So we're doing pretty well on with our Mara, and I am looking at Mara to break this 1980. When it does, there's not as much volume. There's not as much volume. Let me turn off some drawings for a second. Going over there, really not a lot of volume. Once we get above this area, like we get above 1980 here, easily push to 25. After 25, it's open air up there. Who knows where we could go? So I'm leaning into my Mara. I have been buying out, honestly, till March to give it a little bit of room, because with the way that the liquidity cycles have been working this time around, we might see a bit of an elongated cycle. It's possible. I'm not calling for it, but it's possible. So I am giving myself enough time with my options contracts to potentially ride that out a little further than usual. So instead of January, I'm doing March, just in case I need to hold them a few weeks longer. But if I look at this Mara chart, this thing is looking like it really wants to potentially, once it gets above 25, who knows where it could go from there. And if I pull on my drawings, it's this yellow line is really a big one right here. Let me, I can get rid of this one. This yellow line right here, this dash one, that's going to be a big one here going forward around 25.75, which coincides with this right here, right where these two meet here in about December 1st. If we get above this yellow line, yeah, this thing's going to come up. This is what I'm looking for. I'm looking for it to come up, tap it from above, and then bam, up into like the 40s potentially. That's what I really want to see from Mara. Anyways, the RSI, the BX trender, and the stochastics all agree that Mara is likely going to continue trying to push a little higher. So I have been holding on to that. HUT is one I sold. I did sell out of my HUT. I had 300% profit and I took it. I took my 300% profit. I've been in this thing since this pullback over here back in August. As it was pulling back, I was buying. bought a couple contracts, made a few $1,000s per contract. It was pretty great. It came up. I really wanted it to hit 41. It hit 39.69 and then started to deflate. I might consider reloading them potentially. Like, it's not impossible that I could reload it. Let me get rid of that. It's not out of the realm of possibility. I actually don't want this one either, and I don't want this one either. I've got a few too many drawings on this thing right now. Okay, so yeah, I'd like to see HUT potentially, like, maybe come back to this volume spike around 26, 27, maybe even just tap the top at 30 and then bounce again from there, and then I'd consider reloading. But I captured, with my call options, I captured a move of about 113%, which was significantly more on the options that I had. So I decided it was time to take profit on those. Now, could it go higher? Yes, it could go higher, but things on the weekly are getting a bit overbought, and especially with a nice wick on top that it's got right here. Yeah, 8%. You know, I would expect potentially an 8% drop from there at least, which would be about $33. And then if it gets underneath that, which would be the bottom of the body here on this big green candle, which is orange on my chart because I have a thing that shows me where the big volumes are. If it gets under that, then we're going to fill this gap down here to do this fair value gap. And I'll show you the fair value gap right now. The fair value gap goes from 32.47 to about 28.66. There's a fair value gap right there. And if that gets filled, there's another one down here that goes to about 24.91 between this big green candle and this little doji down here. Those could fill. And with a wick like that on top, it might just fill this, at least this first one here, to about 28.66. Is that right? Yeah, about 28.66. And then carry on from there. So in fact, I am going to draw that. I'm going to lock it down. I'm going to put an alert on there, and I'm just going to go fair value gap filled. There you go. All right, let's move on to the next one. HIVE. HIVE is another one I sold mostly out of. I'm purely profit on this thing now. I'm only profit on this. I sold almost all my contracts, unless I did sell all of them on Friday. I'm having a hard time remembering right now because I have a few too many positions open at the moment, to be honest, because things have just been getting so euphoric and frothy. I've been involved in a lot more stuff than usual. So no, I still have a few HIVE contracts that are up 163%. So I am looking to potentially offload those if they come down anymore or if they shoot up anymore. Now, the reason I took out all all my cost basis and a little bit of profit was right here, this candle right here. If it closes underneath 377, we're going to fall and we're going to fill this fair value gap, which goes all the way down to $3.03, which would be this volume spike over here on HIVE. And you can see right here, we got this big, this big concave little space here on HIVE chart, which pretty much goes down that this, the widest part of this spike right here goes down to the bottom of the fair value gap, which would be about $3.03. And that could happen. That could happen, especially with this ugly doji, this huge selling candle coming off right there. Now, if we get back above $4.07, this thing's going to $4.90. That's just going to happen. And I won't be in it for the most part because I'm out mostly, but I'll have a few runners going for that, specifically for that scenario. But I would not be surprised. I would not be surprised to at least, if it doesn't fill that fair value gap, at least come down, hit this orange line at about 340, and then take off from there to go higher. That's what I would be looking at HIVE. And I'd be watching close this fair value gap down here at 303. And if we lose 303, I'd be looking at it to come back down to support at 235. So on the way up, I'm looking at about $5 or about this yellow dotted line here for things to roll over. Unless they get a big AI deal. If they get a big AI deal, they're just going to shoot to the moon like Wulf. And I'll have missed a good portion of it. But I'm looking at this point in time for maybe a tiny pullback for some of these, and maybe not. Like, let's take a look at Iren. Iren was up 6% on Friday. Wow. Look at this thing. It's just driving higher constantly. Higher. Let me just higher. Wowzers. All right. This thing I thought would hit about 40. I said it was going to hit 41. I still think it could very well hit 41. But look at all these big fair value gaps being left behind. Let me just draw. There's one right here. There's one right here. Look at how big these are too. There's another one all the way down here, big one. Quite a few big fair value gaps there. for this thing. Now that doesn't need to fill those, but if it's given a reason to, it will, basically. Maybe not that bottom one, but at least this top one here to about 29.91, which would be, you know, a $10 drop from here for Iren. So am I saying Iren's a bad buy here? No, I'm not saying that. I still think it could hit $41, but personally, I'm not buying it. I made my money on Iren. I've made money on Iren multiple times on these runs up. Iren is a leader, not a follower in this space, so it tends to run first and then drop early, kind of like MicroStrategy. So I would be looking for it to at least give me a pullback close to something like kind of like back here, right? Like back here. Let me turn off the drawings real quick so you can see it. When I said, hey, that big candle, and I thought it was going to pull back and fill the fair value gap, well, it almost did. Look at this. There's a big fair value gap between right here at 1522 and 1430. I thought it was going to fill that. It came down to 1474, didn't quite fill it, and then started going. So in this scenario, yeah, maybe it'll come down to 350, 360, 3050, 3060, right? And then turn around. Maybe it'll fill the whole gap. I don't know, but I would expect some kind of cooling off to eventually occur on this thing. I tend not to buy things if you've already got it, great. But if you're not in it yet, I tend not to buy things when they are, you know, 600% off their lows. That's doesn't seem like a good time for me personally to be buying things. I like to buy things when they're near their lows, like that. What's back here for CleanSpark and like for Mara and for HUT when it was down here doing bull flags, or Hive when it was down here doing bull flags. That's when I like to buy, not at, you know, when things are at their highs. Same with Bitfarms. Oh yeah, Bitfarms. I forgot about Bitfarms. Bitfarms went absolutely ballistic. So I sold out somewhere around 250, 260 at some point. I sold out like all my Bitfarms shares, and my contracts, I was up nearly 500%. So like, I mean, 500%, plenty good for me. I've been talking about this. I had been talking about this. Where is my, there it is. About this double bottom here for the longest time. And I did have to sell out at a loss for some contracts I didn't buy enough time on right here. And then I reloaded them because it wasn't over yet. And man, was I ever happy I did that. 500%. I made back that loss and way more off of that. So yeah, Bitfarms going straight up, and it's done this before. Like it did it back here in November 2023, right? 3 weeks, almost 4 weeks. It was just straight up action, and then it collapsed about halfway down. So if it collapses, I'd be looking at $2. Maybe 215, so like 215 to $2 I'd be looking at if this thing collapses. And then from there, if I get a back and forth like this candle, and then I'd be looking for I'd get down to the daily, and I'd be looking for any closure above these bodies here for a return to the highs. So like if it came back all the way back down here to like $2, I'd be looking for some candles, right? I'd be looking for something like this. Let me just grab that real quick and apply it to this scenario. Something like this. Okay, something like this. And then, right, it came down, touches it, and I would wait even after it touched it, and I'd be looking for a candle to, like a daily candle to close above these two right here. Like I'd get it right here, and then I'd hold through the volatility. As long as it didn't go underneath these candles over here, I'd be holding it and looking for it to run up even higher. In this case, $4 maybe higher on Bitfarms. So am I bullish on Bitfarms right now? Not necessarily at this moment in time, because if we look from the lows, Bitfarms went up 400%. And like I just said, I don't like buying things when they're 400% off the lows. I'd prefer to buy them when I see patterns I like that look like they could break out, and it doesn't look like it's going to break out further from here, but though it could totally push up. It could totally continue to push up 350, 360 again, and then potentially fail, come back down to 2, and then I'd be interested. But for now, I've made my money, and I'm going to sit back and wait on Bitfarms. And if you're in Bitfarms and you're up 400%, of course, nothing I say is financial advice and not a suggestion to buy, sell, or hold any asset whatsoever. Just remember good risk management. Remember good profit taking, practices. It's important so that you don't give back all of your gains. You never want to do that. So, ultimately, it's always your own decision. The risk is always yours. I encourage people to make good choices in terms of practicing that risk management and profit taking when profit taking makes sense. All right. Anyways, Riot. How's Riot doing? Riot got a nice push up, actually. I really like that. Okay, I like that a lot. So let's go ahead and do a real quick fib on this bad boy. Let's do a fib. We'll do it from this run here. So we closed solidly above this fib level here. and that could go as high as 1956, and if we get above that, 2182. If we get above that, 3142 off of this formation back here from September. Yeah, that's totally within the realm. And I said it would go higher when we saw this little action here where it came up above this, came out down, bounced off the 50 and continued higher. I said it would go higher, and I still think it could go higher. These things are barely getting into overbought territory, meaning they could, and we're in a frothy market, it could push higher. Currently we're here, it probably wants to go for 1875 and then possibly 20. Those would be the areas I'd start looking at Riot to potentially deflate and come back down to this white line again, and then maybe bounce. And if it doesn't bounce, come all the way back down to about 12. If it doesn't bounce, if it goes higher, like I said, we're looking at 20. We're looking at 23.96 to 24. We're looking at, let me bring my fib. We're looking at 31 in like a breakout moment, but yeah, so far it's run nicely. I said it would when it hit this little thing, boom, and then that'll go higher, and it did. I'm very happy about that. I would watch this white line, this white trend line. If it loses that, it's done. We're done. Bye-bye. Walk away time, in my opinion. Very much like when you were back here, and if you drew this here, as soon as that line broke right here, right, especially when it came back and tested it and failed, that was the moment to get out back in February before this big drop here, which would have saved you, if you got out on that first one, would have saved you a 47% drawdown. So pay attention to this white line. That's the one you're watching right now. If you lose it, might be time to run. Same thing here, like back here. If we draw this trend line here, that's crazy. We could have done an even tighter one here from this. An even tighter one would have been prudent here, right there. And you would have come up, yeah, right, as soon as it lost it, and you could have saved yourself from a 21% drawdown there. But of course, I would have drawn another one right here, especially when I see two straight up in a row. That's when I tend to sell, just like what I did with Bitfarms. I saw two straight up in a row, and I said, all right, it's time to go. Let's get out of here. Let's take a look at Cifr. Same thing with Cifr. It is one of the ones that is up. It is near the highs. Its all-time high ever is at 1539. It's currently at 1228. I do want to see this thing come back. I want to see this thing fill this fair value gap down here to 878, or at least try and touch this blue line right here. I want to see that. This thing, for me, like if you're in it, awesome, and maybe hold. But if you're not in it, off the lows, currently we went 582% off the lows. If you're not in it yet, is that the time to buy something? I don't know. You tell me. I'm waiting for this thing to give me some kind of pullback and push up, and if it just continues to push up, I won't take it because I already have my exposure through CleanSpark, through Mara, through many other things. So through IBIT, lots of stuff. So I'm not interested in adding to anything up already almost 600%. And then if you have the Cifr warrants, look at these bad boys. Man, I should have bought more of these down here under 20. Look at this. This went from 20 cents to $4. 20 cents. This thing went up 2,200%. 2,200%. You got 22 times your money. If you put in $1,000 into these at 20 cents, you would be sitting on $22,000. That's crazy. This is why I buy the warrants, by the way. Wildness. Yeah, really good. Very happy about that. That's pretty cool. Anyways, yeah. Let's take a look at Corz. Corz still kind of floundering a little bit. So it did get this sideways action, and it did break out. It did have a breakout, and it could push up as high as 1827 before running into some resistance here from the fibs. But keep in mind, remember, this one's stuck in that deal with CoreWeave. We haven't really gotten any details about that, so this could easily and quickly deflate back down to 13, maybe even lower down to possibly even 10. So we saw this thing lose all of its movement largely because of that deal, and that's still going on. It's still ongoing. It hasn't been resolved yet, so I'm staying away from this one personally. All right, Wulf. Wulf tried to peek out above this, but hasn't. I'm not interested in Wulf until it's above 1135 or fills this fair value gap down to 567. I'm not interested in either way. Until either of those are met, I'm not interested. Why? Because it's up 443% off its lows, was at its high 476% off of its lows. It's creating dojis inside of this little block here. It needs to choose a direction. It hasn't chosen a direction until it is firmly outside of this box, either upside or downside. So I'm currently not interested. But as long, if you bought it down here, there's no reason not to hold unless you lose this box down here at about 865. In which case, even if you bought it here before this big pump right here, that would still be a 74% gain. So no harm, no foul, I think. Now, what you could do is maybe go down to like a daily, right? Go down to a daily and maybe do a trend line like this. And once you lose this trend line from the bottom of that gap up, once you lose that trend line, then maybe consider cutting the position. Because like if you did that, right, and you went to where the trend line broke, which would be about right there, you'd be looking at an 83% gain. And then if it fell to the bottom of this and held and started showing strength above 921, you could start getting back in. And you know, no harm, no foul. You sold and you bought back in at a lower price. Big deal. Now, how successful is it when people do that? Usually not particularly successful. You might be the first. But like I see right here, I see a rising wedge, and when it breaks, I'm expecting it to come back down to about 869 and probably, you know, flounder around there before getting an end of year push back up towards the maybe not the all-time high, but maybe it could push to the all-time high over here at like what the heck? Where's it all-time high at? All-time high at $44. I mean, maybe could. But I'm not interested till it does something, till it picks a direction. Because when I look at this, where it currently is, I'm looking back here at like November 2024, which had a very kind of similar structure here, right? And it went, you know, on this big tear. And then when it broke it, it came down to the bottom of that structure, filled that big fair value gap, which we'll go over here and look at, filled that big fair value gap before the gap up. And then tried to go higher, failed, went even lower. So I'm not interested particularly in Wulf at this time. I know they've got Google involved, so I might consider at the bottom of this rising wedge, maybe if it holds, to see it push up to the top of that rising wedge again. But that is highly risky, and why take high risk when I'm already in tons of profit on things I took positions in when they were low risk. So personally not interested, but if you're holding Wulf, I mean, congratulations, you're doing great. And hopefully you continue to do so, and hopefully you've got an exit plan. Always have an exit plan. Everyone, always you need an exit plan. All right, let's go take a look at Btdr. Btdr, ooh, interesting. Okay, Btdr held here. I actually kind of like this. I'd be interested in Btdr. Why would I be interested in Btdr? A couple of reasons. One, we're right here at a volume spike. If we conquer that volume spike, we easily push to 1850, possibly as high as 2082. Now, I know why this one's here. Actually, yeah, because it must be one of these big red candles on the daily. Must end right there. $19. I would watch 19 as a struggle point, but it gets through that. Yeah, I'm looking at 2080s for that, which would be a pretty significant move from here up to that. We'd be looking at 27%, but on an options contract, that's 100%. So pretty good. That's something I'm interested in, especially coming off of this double bottom right here. We broke the neckline here last week, held it this week. Btdr could have a move in it. And of course, we've got RSI is not overbought. It's just over 50 and under 60. The BX trender is showing significant improvements in buying pressure, and the stochastics are green on yellow pointing up. That tells me Btdr could move up, potentially even as high as the top of this ascending channel. Now, we do have another channel in here that I don't have drawn that I'll draw right now. We have this channel. We do have that channel, and maybe we just come to the top of that channel, which would be about, you know, that $19 level, and maybe we roll over there. But I like that we came up, right? Came up off the lows, held a level, and then now we broke out from that level, and we're holding above that breakout. That is a nice setup. And that could potentially, if you're willing to withstand some volatility, we could see it push back to the highs in 26, 27, maybe even $30 on Btdr. So pay attention to that. That is interesting. Btdigital, I'm not really trading Btdigital anymore. It's an Ethereum play. It's not a Bitcoin play anymore. It is only Ethereum because they've spun off their HPC business, so they don't get any benefit from anything but Ethereum anymore. Not that that's bad, but there are bigger, better players for Ethereum than Btdigital, so I really don't see any reason to play this thing. It is stuck in this massive volume spike here that goes from 344 all the way down to about 237. So I'm not interested until it's above 345, to be honest. Not interested at all until it does that. Or it comes to the bottom about 240 and holds. That's the only way I'm interested in this. Now, this does look like a falling wedge, and like it's breaking out of that falling wedge, which could push it up to 478, maybe even up to back to 556 bucks. But for my Ethereum exposure, it is not my preferred ticker any longer. So that's all I'm going to say about that. CANG. Okay, CANG is looking a little worse for wear here. It's at the bottom of this volume spike. If it drops, it's going to hit 414. Where if it doesn't hold, it's going to come all the way down to 257, and that would suck. But if it starts to break out, we can go from the top here to this here. If we can get back above this orange line, we're going to push up into 563. Whereas if we push out back up above 563, I fully expect this little volume spike up here at 842, which is not a huge move. But again, on options, that's a 50% move, and on options, we're talking about hundreds of percent move. So we're seeing sellers coming in on this. The RSI is holding just above 50. The stochastics look bad. So I'm not interested in it right now, but I am watching it. Because this does look a little bit like a consolidation zone. It's consolidating right here. And when it's done consolidating, boom, just like with CleanSpark, just like with Mara. Okay. So I'm interested in this one as well. Let's do a real quick look at MicroStrategy. How is MicroStrategy doing compared to the fractal? So we're getting to that point in the fractal where it pops up, and if MicroStrategy is starting to pop up, and where we are looking for, this is kind of interesting because we've got this volume spike that we're getting above, and above that volume spike, it looks like we want to hit 386, potentially even as high as $400. So it might be time to take a long on MicroStrategy for a few weeks, maybe a month. I am watching the RSI. I'd like to see the RSI get a little higher, but the BX trender is showing that some buying pressure is coming in. And last time we had that, like it went, right? It did push up. Okay, last time we went from dark red to light red. Let's see, it was right here. We got a push up of about 16% or $47, which isn't bad. It's not bad. If we did that now, that'd be pretty good. And then after that, we had it again about 2 weeks later. And off that one, it turned green. And when it turned green, it pushed up 43%, which would be pretty significant. So I do like that. And for MSTR, my preferred is MSTX, which is the 2X fund. That's extra dangerous. You know, the 2X are extra dangerous. But if it were to do that and we could see a 50% rise in it, we would be seeing a 100% rise in this one, which would take it back to approximately $49, which is nowhere near where I was buying it before at 88 a long while ago, but it would continue on with this kind of consolidation pattern with MSTX, where I wouldn't be surprised to see it roll over about 49 and come back down, and from there, you know, see what it does. But that's my preferred ticker for MicroStrategy. But again, that is 2X, so it's extra risky. Now, one other we're going to look at, BMNR, which is Tom Lee's favorite thing here with Ethereum. So it's an Ethereum treasury company, and we got a falling wedge, and we popped out of that falling wedge, and we're at the top here. Now we see it get above 61.51. This thing could easily fly back up to about $100. So pay attention to that. I've been selling very, very aggressive cash secured puts on this thing, and if you're in Stalagmite, you've been seeing that, very aggressive ones, and that has been very profitable. I also got assigned on one of them, which allowed me to collect $800 in less than a month, and on those shares I'm up over $1,500 currently. So like we're talking about over $2,000 in just over a month of, you know, selling cash secured puts and then buying the shares as a result of those cash secured puts. So I am trying to do that again. I'm trying to replicate that again, where I collect close to like $1,000 on the cash secured put, get assigned to the shares, and then ride those up. That's what I have been doing with that. Okay, let's go look at Bitcoin real quick. So we're going to close this out with Bitcoin. Bitcoin on the weekly. Not looking great, but not looking bad. We got a pullback. We came back to baseline here, and we're coming up. We got to push up. We really, really, really need to get over $119,277. We really need to do that. We pushed that. We're going to make a new all-time high. We could even push up to $150,000 from there. And like, look at this. You get that little volume spike right there. Yeah, we're going to push that, hopefully. And as long as we don't lose this line right here, and I'll draw it for you. As long as we don't lose this line, I don't like that one particularly. I want one where I touch this one. I want to touch all three of these. There it is. Boom. As long as we don't lose this white line that I just did on here, I'm not concerned about that. I'm going to lock that down. I'm not concerned. as long as we don't lose it. So we could come as low as about 111.7 thousand, and I'm not concerned. We start losing that. That looks like a neckline on a Head and Shoulders right here, right? A neckline on a Head and Shoulders, which would drop us all the way back down to about $85,000. That would suck. That would suck real hard. So we don't want to see this Head and Shoulders come to play right now. And that is the neckline. Right here is the neckline, this white dotted line, which I drew from May 5th, 2025. And the second point I put on the bottom most recently, hold on, I put the bottom on the bottom most recently on the weekly chart at 107,000, and then currently that neckline sits at about 111.5, 111.7, somewhere there, $1,000. Now let's take it. Let's drop this down to the daily. Let's drop this down to the daily. Turn off the drawings. Here's where we get interesting. Now, one thing I don't like is, okay, this does look like a bull flag, but if we lose, again, we lose 114,000, we're going to drop all the way down to 111, which, if you remember, is the neckline of that Head and Shoulders on the weekly. Okay, that's where we have support. Now, if I turn on the global liquidity, okay, look at this. Okay, so I've got global liquidity, and I've got two things to look at, two ways to look at it. Let's turn off the M2 for a second. If we turn off the M2, let's go ahead and do this and do this. Okay. If we turn off the M2, you can see it's been falling with it, and now it's rising with it. And things kind of go a little flat from here. They go up a little more, right? And then go flat around early October, and then do one more little wobble, and then a spike into late October before we start to see a downturn into mid-November, before we go flat and start to just stay flat and kind of get consolidation between November and December. I've been watching this hard right edge to see if it pops up. Now, if we do something interesting here, if we include the US M2, EU M2, Chinese M2, Japan M2, other countries are very small. We can include them, but notice how they changed almost nothing. Like, it changed almost nothing, but okay, we can add it. Okay. If we add all the M2, this thing's just a straight line up. Like, look how we followed that so nicely, though, too, right? We peaked at about the same time, which was on January 21st, and then fell where April 10th for Bitcoin, but the global liquidity continued to fall until April something. But this was largely due because there were some trade deals that started coming through right away, and that pushed us up higher. But then it started pushing. And like, look how closely we're kind of following this to a certain extent, right? We got like this little push up right here, boom, and then like this plateau, which kind of plateaued and fell. And we got this little dip where we got that little dip, and now we're just kind of following it almost to the T right here. And if this is to be said here, we could be seeing a brand new all-time high around October 21st, which would coincide with Bitcoin making a new all-time high about 30 days or 30 days-ish after gold. And then again, we still have that dip into early November, but that would just take us back to where we currently are right now at about 115,000, right? About 115,000, somewhere around there, and then drive even higher to making brand new highs in January. And if I'm watching this very closely to see what it does in January, February, because that would tell me that, hey, we're going to see either a continued blow off top or a sell off back down to the mean, which for Bitcoin, go to the weekly, and let me turn off the global liquidity on the weekly, and we go here. The 20 week is about 109,000. The 50 weeks about 97,000. Yeah, we'd be coming back towards like that we would mean revert. Let me go to the monthly. Let's take a look at the monthly. Yeah, we'd be mean reverting somewhere around $100,000 or so at some point in the future. So anyways, that's all I've got for you today. Please like, comment, subscribe, share this video. Check out the TradeCape store, link in the description, as well as the channel bio. Check out the channel memberships, especially that stalagmite level. If you're having trouble with these markets, if you just want a little bit of guidance as to how I'm managing and navigating them, you can see the results right there on the screen from the trading activity from the beginning of starting stalagmite and to today. Obviously, I'm doing something right there. Have a profitable day.